Well, good morning everybody. Welcome to Stockradar Stocks on the Move for another week. Today's date is the 19th of October 2023. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, today we're talking about the control and confidence we need to trade the market successfully. There's a few tools that I have that help me. A lot of them are common to other people. So Stockradar provides a template of necessary resources built around a trend and momentum strategy. Okay, we've built our setups and trend intensity rating system, all controlled by the governing rules of a trade plan. So that's our strategy and the trade plan governing rules, which is pretty common to most successful traders. There are many strategies that may be wrapped up in the trade plan process, which includes such things as systematic analysis procedures, money management, and many other components that make your stock market strategy work. Okay, so following these common guidelines will give you the confidence that you're following the right path to being a successful stock market investor. It's very important you have these common elements involved. So all successful stock market investors, no matter what strategy they do, will all have these common traits, even though they use different strategies. Our radar newsletter strategy tables, which I've introduced over the last few months, go part of the way to helping you understand what some of these strategies might look like and that you can use, or you can maybe even develop for you further. So this is just something extra for you at the moment. But understanding that these strategies are importantly governed by these trade plan rules. Okay, so we're going to talk a bit today about confidence and control, trading tactics. I'm going to talk about bringing the trend intensity rating together. We've looked at the four different components of trend, price, trend, volume, moving averages, and MACD, momentum. We're going to talk about bringing those all together into one cohesive argument that gives us we have a price on a stock and we can have a trend intensity rating, which gives us a very good idea of what we're doing. But first, let's get to our top 10. At the moment, our top 10 looks a little bit like this. Stockradar on top, which has made a bit of a recovery. PME, QBE is our stock of the week. I think it's made a new highs again yesterday. A couple of other ones in there, which have been bouncing around. Some are pulling back, but they're still having qualified trends there. CSR is another good one. So as you can see from our continued stock pick count, which is low, I'm going to show you that in a second, we haven't been able to do too much, and that's why we have a portfolio approach that allows us to focus and zero in on those stocks that do have qualified trends, and that's where our funds should be. So believe it or not, there are a few good ones out there. We've just recently taken a good profit on 7 Group. We've got some other ones running, such as Commodities, as for QBE, Car Sales, Washington Soul Patterson, and a little surprise packet, Magellan Global Fund, which we're going to look at a bit later on. So we've been keeping our powder dry generally for quite a while in the stock market. Sometimes it's just more important to conserve your capital, but still take the opportunities as they come along, because there have been some good opportunities. So let's get to the markets and have a look at them now. At Dow Jones at the moment, well, we're coming off these highs as we've seen before. We had a bit of a rally last week, but we've sort of been knocked on the head last night. But there's no real big deal there at the moment. We are having a downside test at the moment after failing at this high here. So we're sort of teetering, we're sort of taking little steps downward at the moment to see if any buying is going to come in and start supporting this market at the moment. And we do have a bit of destabilisation coming out of the Middle East, but generally when wars happen, the markets do pretty well. So we'll have to wait and see how this develops. But the commodities might be a bit different, especially oil, but the stock market for some reason take war as a good thing. So anyway, we'll see how this goes. We are correcting at the moment on the Dow. The S&P is similar, and there's nothing big here. We've seen some selling here. We've also seen some buying down here. Momentum still holds in a positive zone, so it's not all over yet. But we are having a little bit of a correction at the moment. And the Nasdaq's similar as well. Come back to fairly good support here around 13,000, holding its uptrend. Hasn't been any significant selling here. This is slow, but still remains positive. So the markets are still positive out there, and just taking a little bit of a pause at the moment. As far as the commodities go, copper is still going down. We know that hasn't changed. There's nothing really there to alter our thinking there. Gold, well, it went down and came back up again. So we were back to square one. So I don't know what happened in those 2 weeks. But there was nerves, and then there was confidence, and gold, and then it just jumped again. So we've probably got a little bit of a a series of lower highs coming across here at the moment, putting pressure on that. So we're now looking sort of, any upside test may fail up around here at the moment. I would probably tend to think it's going to come back down here at the moment, but we'll have to wait and see what happens. There is pressure there on gold and Brent as well. Again, we can see this one. Sorry, it's just disappeared. Okay. There it is again. Okay, so we can see Brent crude here. It came off, bit of nerves hit the market there, but it's bounced back again like gold. So again, nobody really knows what to do at the moment in these markets. And that sort of situation, you've got to be very, very careful. That's why I've only got a few stock picks at the moment and a few trending stocks, and a lot of other stuff is uncertain or going down at the moment. So things will change, but for the moment, we can see the selling did appear here on crude. A little bit of a bounce on a bit of volume there, but nothing really there. So pressure's maybe back on the downside there. We might be failing in this little turn for the moment. So that's Brent crude. Now to our market, the S&P ASX 200. Well, we're still flailing about, going nowhere, trying to find our feet, trying to find our zen, whatever we're trying to find, but we can't go anywhere. We are going sideways at the moment. So we've come back to S1, we've held it, we didn't get a flop down to here, we're getting a little bit of support again. This is flat, volume's disinterested at the moment, so the whole market is really not a very happening thing. For my business, it's not a good thing. I like activity, that's the way it is. So for the moment, what I've got to try and do is help educate you as best as I can on how to approach the markets. I have been around for a few years, and I've seen markets go up and down. I've seen GFCs, I've seen COVIDs, I've seen lots of other things, Iraqi wars, all this sort of stuff. And you get to know after a while what the effects are and what's prudent and where the common sense should be. So for the moment, it is really, the market is telling us at the moment, it doesn't know just as well as some of us don't know, apart from a few stocks, of course. Okay, so that is the ASX 200. Now let's just go and have a look at the stock pick count there. Again, we've lost another stock this week. I think 7 Group came out this week. It's come back off its highs, but we had a good run on that one there. So we're down to 30 data items out of 184. That is 24 stock picks out of 164 stocks and 6 ETFs of 23 ETFs. So it's all pretty thin on the ground at the moment. The 24 are interesting little stocks at the moment. The portfolio update, not a lot of change. Accumulation index is up 8.5 over those last 20 years, and you can see the results there. We're still fairly full in most of these stocks, apart from the conservative, which is a very conservative one. It's got 4 out of 10 there, so it's a bit light on. We've seen a couple of leaders come off recently, and they've been negated, Telstra, Sonic Health, and a couple of other ones. The Energizer Energizer 5 stock still holding its own, and the other ones are just pottering along there at the moment while this market goes a bit flat and sideways. So we just have to be a bit of patience at the moment, but things are okay. All right, so that is the portfolio update. Now for stocks. Okay, I'm just going to go through a few stocks for you, just to try and help you along with some of these things. It's not that interesting. We looked at a few stocks last week. We looked at Qantas, CSL, which were both failing. We looked at Coles and Transurban, which were sitting on those supporting lows, looking interesting. Goodman Group, QBE, Car Sales, REA are all trending. BHP and CBA are the leaders, which are holding our market up at the moment. And RMS, Ramelius, was a little minnow with an uptrend. We'll have a quick look at that as well later on. So what do we do with CSL? It's a very, very difficult situation. If I just close this up a little bit, so we can have a good look at what's going on here. Okay, so here we are with CSL. It is now about 30% off its highs. Highs up around 336. It's now down around 238. Okay, now we've got this market here. This is a support area here. These lows have now been taken out completely. This is still weak. Volume is still high. If I can just make that volume a little bit brighter, you can see very clearly the volume is still very strong here. So this ain't stopping in a hurry, this one here, and momentum is very weak. So, every now and then leading stocks do it and they come back. BHP did it to $10. CSL did it many years ago. Brambles has done it. Lendlease is doing it. All these stocks, they all at some stage will have a correction. Now, there are a few murmurings about CSL at the moment about what's happening there. And the price is tending to confirm that concern at the moment a bit, I think. So the blue-white status may not be there so much anymore. And we're a little bit wary here, as this is a fairly sudden drop from May at around 311 to now being in September at around 237. Trend intensity rating is -10. The trend is down. It's below the average. Volume is high and momentum is weak. So really, if you, on the basis of what I do, you leave this one alone for the moment, because if it does fall down much further, it's going to fall a lot further. So strange as it may seem, these things happen. So that's CSL and what I think about it at the moment. So be very careful. So that's the leader. Now we're looking at trend reversals at the moment. Magellan Global Fund, we haven't really known too much about what's been happening here because we just follow the price. But really, we're now starting to find out what's been happening with, I think it's Bolton and then the options expiring, things like that, and trying to get this discount closed to the biggest stock there. So we're seeing a bounce this week. There's people starting to realise what's going on, but we have been seeing this build up here. We did get the trend reversal back down here in April this year, down around 149. It broke above the price. Volume, momentum, average were all signalling yes. So we got into this one. It trended strongly, and we've seen some very, very strong demand come through here. And we've been watching this a couple of times in the last couple of weeks, which has been interesting. And then we did see a bit of a sell-off here and a bit of volume, not heavy volume, but a bit of volume there. Our stop is held, and we're back in this, and we're still in this stock, and it's bounced again this week. Trend intensity rating +8. So it's just been an interesting situation here where the stock price. Often what is built into the stock price is what we don't know what's happening, and we don't find out till later on. But the price and the volume patterns can tell you quite a lot about demand. And for this stock here, we've had a good leg up from the demand there. It's run on nicely. We've got a nice bounce up now, and we've got some good profits there and good volume. So all is looking good for Magellan Global Fund, as it may seem. Okay, so the next one I want to look at is Xero, which has been a stock pick for a while, but it's also been going sideways for a while. Now, stock markets do this, as I told you before, many times the last few weeks. Stocks go up and they go down and they go sideways and they chop about, they correct, they consolidate, all this sort of stuff. So Xero had a big downtrend here, big deep downtrend from a big failure up here at distribution point, up around 150, okay? Big downtrend, and then all of a sudden we've got a big accumulation down the bottom down here. Okay, and then eventually we got our qualified reversal, okay, which came in through here. So I think we probably did buy it up here, somewhere around up here. But we have got a good entry on this one here. Conditions were all right there. Volume, momentum, and moving average. And so now we've gone through this constructive sort of consolidation period for Xero. And it looks really interesting again, because I know it is a very good stock, and there's a lot of people looking for this to go higher. But I'll let the price tell me what it's going to go higher. For the moment, it's just going sideways. But if we just blow this volume up a little bit, we can just see a little bit of volume starting to sneak back in here the last couple of weeks, and we saw this big up move here from the low. So we've got the support area here down here, around the trend line, around this horizontal support, around the moving average is an area to focus on. We're now getting a little bounce, which is good. So now we've seen that. We're now seeing a successful test of that. So now it's for the upside challenge, which is at R1. And through R1, we then get R2. So this is a process we go through at the moment. We're going through the correction. We found a bit of support. We're now lifting off that support with some good volume, which is a good sign. Momentum, although it's slowed, is still positively above Xero. So the construction of this is good. Trend intensity rating is 8, which gives us our perspective, gives us our control, and gives us our confidence in what we're looking at. So keep an eye on Xero. It looks like we're going to be a test of R1, and it may go through again and continue the trend higher. Okay, what has been a fascinating stock here, I'm just talking about new highs now, moving on from trend reversals, has been, we looked at this one briefly, I think, not long ago, and I was just quite fascinated by this battle that's been going on here. We have an uptrend here of support, and to this point here, you're probably looking at this as a pretty good odds on bet to go through the highs and onward and upward. Well, it didn't quite make it. It failed. We had a pullback. We've now got a lower high, higher low. So we're getting this converging lines here, which tells us there's an uncertainty in there, but there's a battle going on. And all of a sudden, one team will win this battle. I like Biden's account of teams in the Middle East, which is not really a very good word, I wouldn't have thought, for warring battles. But for the stock market, we can use that. And the buying team at the moment seems to be winning over the selling team. And this is only this week, so we've got more to go this week. It's still closing within that line there, but we do have a bit like Xero. All of a sudden we're getting a little bit of volume down here, This is just starting to spike above zero. Not trying to grab onto too many little things, but it is constructive. And we're now getting a move above here. So it's risen from $4 to $4.50 in the last couple of weeks, or $4.75, which is a good sign. So this will shake the sellers a little bit. It will start to shake the sellers. I think until this level goes at R1, we're probably still not out of the woods. But for the moment, it looks constructive, and it really has been a fascinating battle here. We've had selling going on, we've had buying. All the time momentum has gone back to zero, which is exactly what happens when a stock goes sideways. If it goes sideways forever, so will the momentum index. Now it's gone sideways. It can very easily start kick up or down because of that sideways movement once we start getting positive or negative results. We're starting to get positive results, which means we can now look maybe for this little tick up and this little bit of volume to encourage this test of R1. So keep an eye on it. Trend intensity rating is still neutral at -1, not out of the woods yet, but a new high above R1 will be an exciting new high for Capricorn Metals, which has been holding up pretty well in a fairly docile metals market. If we look at the metals group for the moment, if I just go down here and look at the metals and miners group, this is on my trading center page on Stockradar. There's only actually one stock it's in here. In fact, this one should be that's to Terra Royalties. There's only one stock positive in the whole of the metals and mining sector. Okay, they're all negative right down to Zimplats. So there's not much in that sector, but as I said before, so Capricorn Metals is starting to stand out in that sector quite interestingly. So certainly one worth watching for you at the moment. Okay, now again, I'm going to stay with the metals at the moment. There's a few opportunities there because there's no stock picks in there. There's got to be opportunities in there. So this is another one that looks interesting. Again, it's a gold stock, which we've got to be very careful of. But if I just size that down here, okay. So we've got Gold Road Resources here, which is a stock that's been quite interesting. What we have is we have a high at about 189, about 190. Okay, and we've got a low down here at $1, and we've been trading in this range for quite a few years. Okay, now we're starting to get this move towards upwards. This is quite promising, all these high lows here, but if ultimately, like Capricorn Metals, we need to see this level break to give it us confidence. But we've got a couple of gaps up here, no particular reason. Gold's gone up and down during this time. Australian dollars, although it's been weak, had a little bit of strength recently, but it looks pretty weak, and that's probably why some of our gold stocks might be doing okay. But for Gold Road Resources, a new high would be a good move. This is promising. There's a bit of a lull in volume still, so we're not really getting a lot of volume at the moment. Can be a little bit misleading in these stocks because they can be very hard to get a hold of. Once buyers get keen, sellers back off, and it becomes a shortage of stock situation. So Gold Road Resources is interesting. There's not a lot of volume. The momentum indicator is just starting to tick up there, as we can see down here, and it's moving above the average. So what we really need is, I'd like to see a little bit of volume appear and a breakthrough R1, and that will give us a signal, probably for a good trend. And in any situation like this, I usually extrapolate the range, which is about 90 cents, and just extrapolate that up as a potential target for the move. So that's an interesting one, Gold Road Resources. Make sure you have your stops in place with these ones here. Again, when you're playing these stocks, sometimes it's hard to get a stop of 15%. So if you want to widen that stop, just lower your exposure a bit to make yourself a little bit safer. Okay, now, so that's the trend reversals and news highs I want to go through. I am introducing a new table into my the Radar newsletter this month, which will be talking about key lows and what happens at key lows. I mean, I used to have a key low reversal, but it got melded up with the trend reversal, so I decided to get rid of the key low reversal and just look at the trend reversal. But what I want to focus on is these key lows and what actually happens here. So I've got a couple of stocks here to look at because a lot of stocks have gone down, and if I actually look at this at the moment, if I look at the key lows I'm looking at the moment, I'm looking at ATM, 2M, which you can see here. Let me just blow that up for you so you can have a good look at it. Okay, so this is A2M. We're going to look at another one in a second, which is IEL. We've also got stocks like EBO, GPT, IPH, NIC, NSR, TLS, Sonic Health, Transurban and Coles, all sitting on major lows at the moment and certainly worth looking at. So firstly, we've got A2M, which has come down. All of a sudden, it went up from $4 to $7, went down from $7 to $4, and here we are again looking at this fairly important area here, which supported. It's probably an all-time low down here, I think, after the big downtrend we had from wherever it was, which was much higher many years ago. But are we going to stop here? Well, we've got to evaluate this now. So this is a steady downtrend of lower lows and lower highs, and it still looks pretty steady to me. Okay, it's below the average. There's not a lot of volume here. There's been some reasonable selling volume here, but it's still dissipating a bit. Momentum is still weak on the downside. It's not really weak down here, but it's below zero, so it's certainly a negative. That's why we get a trend intensity rating of -7 at the moment. So that's it's the only positive at the moment that I've got is the fact that there's a support level here. Okay, now I'm going to be watching this pretty carefully. It may fall through, nothing happens, it doesn't. But if things develop, and I'm going to show you on the next chart what I look for as far as things to develop at these kilos, because they can be interesting, because they usually are psychologically near a kilo is usually a despairing state of mind, or at least a fairly negative. And I'd say that's probably what characterises A2M. People aren't that interested, and that's really where you want to sort of be looking at. Remember the psychology, the simple psychology, Buffett, whoever it is, sell the greed, buy the fear. So we're looking at buying the fear at the moment. So we've got to wait for a little bit of evidence to appear there. But it's an interesting situation, and we'll probably try and watch it over the next few weeks just to see exactly what does happen here. Will it stop here? I don't know yet. Things are still pretty grim, but we'll wait and see. Okay, if we take it down along a little bit further, what I'm looking for as far as these kilos developing. Now, this is IDP Education, which is a fairly, I think, a fairly well considered stock. This stock, it's in a good space, and it's doing pretty well. But it has come down from about $39 to about $22. So it's come down an awful long way. So that sort of rings bells of opportunity for me. And I look at this and I say, okay, we've had a rally, we've had a pullback, no big deal. Did it support it? Well, there's a bit of volume here, looked pretty interesting. This has stayed pretty weak. Then we saw a slight light rally, which is sort of encouraging, but it stopped pretty quickly around the average and came back down and tested again. So we've now come back and testing it again. So we're starting to get a feeling, well, maybe this area at S1 could be a possibility for support. So interestingly enough, we've seen some volume and some buying in both these areas has appeared. So there are buyers prepared to buy it. Again, we don't expect this to turn around and go up straight away. So we're looking for this to develop a base for us to look for a qualified trend to move on, okay? So in this situation here, it's trend -7. The moving average is just sitting below the moving average at the moment. The volume has become interesting. Okay, and the pressure is certainly subsiding on the MACD, although it is still negative. We've still got a negative rating here, so we've got a way to go. But it is subsiding, so I'm starting to get a picture of a bit of volume, momentum starting to subside, not like CSL, which was just negative. And we're also getting a little double bottom or a triple bottom, if you like, across here, which is looking interesting. So we haven't done anything yet. It may still fail, it may go lower, but we're part of the way along building our evidence to say, well, this might be an opportunity for those who are interested in this, because it does move this stock, and we've seen it move before from $20 to $40 in a couple of months here, back at the end of 2021. I always talk about the potential of these stocks because they do happen. At the moment, things don't look like a rally from $20 to $40 could happen, but they can and they do. So I'm prepared for those sorts of things, and that's what we're doing at the moment, getting prepared and looking for opportunities for all these stocks that have really been hammered down. So this one's been hammered down by almost 50%. It's sitting here. I'm getting a bit of average here. Even the selling here has not really pushed the price down. It's certainly been testing it again, but it's bounced again. Momentum's just sort of, still just sitting there. So it's really an interesting situation where we are moving a little bit along the case from A to M. We've got a couple of support areas there. Now, at the moment, this is probably going to be the reversal area, okay? I can't be sure because we're not there yet, but it's below the average here. We're getting a little bit of volume. This is still a negative, and this will always be the last to trigger the buy anyway momentum. So I would normally get the average broken, a resistance level broken, and the volume, which will usually be enough to get me over the line as far as my trend intensity, my qualified trend intensity rating goes. So that's IDP. That's how it looks like at the moment. It's an opportunity, certainly worth watching for at the moment. And again, I'll try and update you every few weeks on what's happening there. Okay. Going to the little specky from last week was Ramelius Resources, which has continued on. It's jumped a bit again this week. We had a little Davis box here, which is broken out of. It'll probably form another one up here shortly. But we had to be pretty patient through here, as we know. But we're getting some really good volume here and some good momentum. So it's starting to look quite interesting, this one. And again, what we want to do is try and capture those moves when the stock really moves. Okay, like what I showed you before in IDP education, $20 to $40 does happen in a very quick period of time. And here we have, considering this one has gone from September last year to September this year, from 60 cents to $1.40, so it's double $1.70, so it's well and truly doubled. So that can easily happen again. So follow the trends, and you will get if you follow all your trends within your defined database of stocks, you will get these uptrends, and you will make some money out of them, because it's important that you do get these ones. So Ramelius Resources is trend intensity rating of +10 and is going up. Okay, just quickly, I couldn't resist, but I'm just sitting here looking at these stocks like BHP. It's just sitting there at the moment and doesn't really want to do anything. And we've got this volume down here which is doing nothing. I know it's squeezed down a little bit by that big tick up, but there's nothing in the volume front here. There's nothing in the momentum. The average is completely flat. And I'm just sort of thinking, well, this has got to be the calm before the storm. And we're seeing a little bit of a nip up today, this week, looking encouraging. It wants to test again. I mean, we've got to get through there first, but, it's certainly lurking, and to my mind. And we do have this big uptrend, which of support, which I'm not forgetting. And this is a top stock, and it's had some negatives. It's got rid of oil. Copper's been going weak. Iron ore's been bouncing around. So really, this stock, to me, is held up incredibly well. Okay, trend intensity rating of -3, so still neutral on that one there. And again, CBA's looking almost similar. You think they're almost similar stocks, but anyway, they're just going sideways. The moving average is flat. Not a lot of volume. It's two-way volume, and this is also flat. So we're sitting in the middle of this range between $90 and $110, waiting for this thing to give us a signal that it wants to go back up again. So I just can't really resist those two stocks at the moment. They're just sort of things intrigue me like this. The challenge of trying to understand what's happening, the challenge of trying to get on the right side of the market is always a really fascinating thing for me. So those are the two stocks I just thought I'd show them. Chuck them in again. Okay, so what was I going to say back there? Oh, yes, I was just going to mention before, when I talked about those key lows with A2M and IDP education, I did introduce that new table, which will come out this week, at the end of this month. As mentioned in the opening, there are different strategies we can employ, but all need basic controls of a trade plan of rules governing such things as money management data universes. So the strategies that I sort of show in these tables are, one is an opportunities table for leading stock that have a certain yield and have corrected by a certain amount. Opportunity, bell rings. Weekly all-time highs, always a good strategy. New listings and demergers are an interesting one, which I follow quite a bit. Stocks that come on board, they usually get excited or they get pummeled and they go into a trading range of uncertainty. Then they usually break out one way or the other. That's an interesting situation there. And I'm adding kilos this week to those tables. So there's a few tables in the newsletter there. Will come out at the end of this month. So if you want to get a look at that, subscribe to Stockradar and you'll get all the information as part of your subscription. Okay, so that's all the stocks I want to go through today. Now I want to talk about trading tactics again. And we're going to go through... Okay, so talking about the trend intensity indicator the last few weeks, talking about each component of it, and today I'm going to bring it together and tell a bit about why I've done it. For those who haven't investigated it too much, there is a big section in the About section of Stockradar, trend intensity indicator, and we'll explain to you why it was designed, how it was designed, how it was built. But I've gone through it over the last few weeks just basically to give you a rough idea. This week I'm going to talk to you a little bit about what it is and how we bring those things together. So the trend intensity indicator has 5 key functions. Firstly, it's to assess buyer-seller behaviour. Buyer-seller behaviour is what drives prices. They make decisions, what information they have, but it's their decisions that drive prices. So we're trying to analyse what those decisions are when they're occurring. They occur in patterns, these decisions. Markets have moods, so we're trying to read these moods all the time. So we're always trying to assess buyer-seller behaviour. We want to try and get a consistent measurement of that behaviour, which is not that easy, but with the indicators that I use and the commonality, it's not so bad. So a consistent measurement of those things. I use trend, volume, moving average, moving and momentum to do that. And each one fulfills a simple definition. So I can quantify this buyer-seller behaviour using the trend intensity indicator and my simple setups. Okay, so quantifying it is a very important thing because that gives you consistency in what you're doing. And then what it does is it rates the power. It gives you the power, or is this trend weak or strong? I mean, I'm really not interested in the weak. I'm only interested in the strong. And I'm going to show you the levels at the end of this. I'm really interested in the stocks that have got trend intensity ratings of 4 or greater and have considered setups, a new high or trend reversal, and I'll look to buy those stocks. Okay, so they're the main reasons what the functions are of the trend intensity indicator. The 4 key measurements, as we know before: price, trend, volume, moving average, momentum. Okay, so what do? Okay, so trend intensity indicator values are weighted and combined together. Okay, so the first one, trend, is either a plus or minus value. It gives me a value of X. Same with volume, same with moving average, same with MACD. There can only be one single value, which will in the end all add up to between plus 10 and minus 10. Of course, I want my stock to be plus 10 all the time because that means it's going up very strongly, and I don't want it to be minus 10, which is what CSL is at the moment, because it's going down strongly and everything's negative. So it gives me a rating on a stock, and it tells me a little bit about the stock, and it gives me a non-biased view, if you like, or an emotionally detached view of what the price analysis is telling me, what this buyer-seller behaviour is telling me, and that's what I'm keen to do all the time. Okay, so what it does, it confirms one of my two setups, if it's a trend reversal or a new high. Invariably, a new high will attract a positive trend intensity rating because it's making a new high. That's a gimme. So the market generally is common sense like that and fairly simple. So, this might seem very basic to you, but it's how it works. So the result confirms the 2 defined price setups, and it's either yes or it's no. If it's no, you don't trade. If it's yes, you do. So the trend intensity indicator, what's the scale look like? Okay, you can see the scale on the right there. 10 to plus 7 to 10 is trending up strongly. 4 to 6 is trending up, and they're qualified. If a stock has a 4 rating or greater, it qualifies as having a trend and the potential to be higher this week than it is higher next week than it is this week. Everything from 3 down, I am not interested in, okay? I'm interested in stocks in this neutral area, which should be grey in this column actually, but it's a neutral area. I'm interested in stocks that have come from the negative areas into this neutral area, because often the cycle goes like the cycle of stock markets: distribution, downtrend, accumulation, uptrend. So too does the trend intensity rating go through the scale, minus 10, up through the neutral to the plus zones, and then back down to the neutral, back down to the minus zones. And that's how it works. That's how stock markets work. So we're trying to follow that pattern. So the trend intensity indicator, behavioural analysis plays a critical role in assessing share price movements. Right. Stockradar offers a consistent and standardised measurement of investor behaviour using its unique tool, the trend intensity indicator. You'll note that the 4 tools that I use are very basic tools: price, trend, volume, moving average, and momentum. Just simple things, nothing smart, nothing complicated, nothing mathematical, just some very simple common sense indicators that help guide me to making profits. So the trend intensity indicator, what it's designed to do by controlling all those things, gives you the confidence that drives emotionally controlled and consistent behaviour. Okay, so that's really what it's supposed to do. That's how it works. I think I've explained most of it to you. If you want a bit more, you can take a trial and follow these stocks, or go to the About section and look at the trend intensity rating and what it is. You can adapt it, change it, whatever you like. You can follow me religiously. It's all about trying to get the best out of yourself and the best out of the profits you can from the market. Okay, so that's most of what I got for you today. What's happening at Stockradar? Well, the newsletter I said before is going to come out at the end of this month. I'm going to cover the health stocks this week. Of interest is stocks like CSL, Sonic Health, which is also nearing a key low, and ResMed, which has been completely dumped of late. Everyone loves the stock, but it's been completely dumped. So that's what I like to see, because the price never lies. Okay, it tells you the truth. The price is the price, and you can't alter that. So unfortunately, that's what's happened. So ResMed's been a bit of a dumper. It will come back, but at the moment it's not the right time. In Radar's Rand, I'm going to talk about what is the real reason we buy and sell stocks. We think we follow fundamentals, we think we follow price, we think we do that, but how much of it is in here or in here that we actually do? So what is the real reason we buy stocks? So I'm going to look at that to try and help you understand what your behaviour is doing and how it works in relationship to the market. and then the new tables, which I'm doing as well. So that's all I've got for you today. I hope you enjoyed it. The market may not be that exciting at the moment, but things are happening, and there are things lurking there. There are so many stocks that have fallen out of the stock big count that there's got to be some opportunities amongst them. I just try and point you to some of them at the moment. So ensure you keep yourself safe, respect your trends, heed your stops, and I'll see you all again next week for another chat. Thanks very much.